Dave Rosenberg joins us this morning, Rosenberg Research president, to discuss. David, so many moving pieces about the consumer. We're waiting for these revisions to come in. Powell, of course, on Friday. Has any of it done anything to prod you to tweak your model?
No, not really. Although the QCW numbers just came out, I think it showed that non-farm payrolls in the year to March were overstated by only 676,000. So, we always trade off, whether it's retail sales or it's non-farm payrolls or even GDP. The revisions are actually what's really head spinning, which is what really caught my eye at the beginning of the year, which was when the Fed, and led by Powell, was saying that they were starting to pay more attention to what business contacts are telling them, highlighting the beige book and survey data and the like, which don't tend to be revised so substantially.
There was an interesting tweet out of Bill Gross yesterday in which he posited that what he thinks is going on is you have wealthy boomers and upper middle class folks transferring assets to millennials and Gen X, and that's what's sort of driving this retail sales growth. Do you think that's happening? He says it could continue as long as capital markets stay healthy.
Well, look, we get carried away always by the latest data point. And the retail sales number in nominal terms was up 1% for July. But, when you look at retail sales volumes on a year-over-year basis, so you smooth out the monthly wiggles, it's actually fractionally negative year on year. And I think if that, theory was valid, then, you'd be seeing a lot more demand for first-time buying in the housing market. The first-time buyer has been AWOL, as of course they've been crowded out by the super stretched affordability. So you're not seeing, if people are giving their kids or their grandkids money, it's not being put to work in the real estate market, and it certainly isn't being put to work in the auto market, because auto buying by people between the ages of 16 to 24 isn't a full-fledged bear market. So I don't know, maybe they're buying iPhones or they're going to Disney. But you're not seeing it in the big ticket items, that's for sure.
Watching the dollar, David, weaken, I know it's caught your attention as well, down about 2% this month. How big of a role is a weaker dollar playing in keeping stocks on this upward trajectory?
Well, the dollar only really feeds through to the large cap, export-oriented multinationals. I think that I look at the dollar, like I look at the bond market. It's another price that's giving you a signal. And the dollar is a pair trade, an exchange rate with other currencies. And it's telling you what the bond market's telling you, which is that the Fed is going to have to play catch down on declining interest rates with the rest of the world. Most of the rest of the world has already started cutting interest rates. The Bank of Canada has already cut rates twice and never went to 5.5. They went to 5. So the Fed in that tightening cycle went much further than any other central bank. And then they've dragged their heels more than virtually every other central bank. So the dollar and the Treasury market together are telling you a signal that the Fed is behind the proverbial curve and that they have to cut rates much faster than their competitors. And that's what both markets are telling you right now.